Okay, excellent, thank
That's
you.
you now.
Thanks. So we'll go ahead, welcome, thanks for coming in the beautiful, afternoon, sunny, yeah, and warm. What we'll do, actually, if you don't mind, we just introduce ourselves around the table. My name is Stephanie. I'm on the board, and then chair of this audit.
Okay,
I'm Taylor Green, I'm the senior animal.
I'm
I'm Tracy Beard. I fail miserably at doing technology. Otherwise, I do my best.
Excellent, thank you. So do we need to establish any sort of a forum here and do roll call? Roll call that as well. Okay, awesome. That sounds good. Thank you so much. So we'll just move into our next item on the agenda. And I'll hand it over for review of audits. Looks like we have printouts right in front of us, so thank you for doing that.
I'll go ahead. I'm going to cover the financial statements and then I'm going to go over the report to the audit committee. But as we go over this, last year we had quite a few issues with different items and this year. So findings sort of last year's and there's one this year. So. Okay, so we'll go over financial statements for December 31st, 24, 23. The first page, and you'll see the independent auditor's report. And this is an unmodified or clean opinion. So if you look at the first section, it says that we've audited the financial statements for the organization December 31st, 24 and 23, and we'll make notes to the financial statements. And it's in our financial statement to present error and after respects the financial position of data and the for 24 and 23 and the respective changes in its financial position and cash flows. And those are all in part of the German so the basis of the payment era talks about that we've audited in accordance with generally accepted auditing standards, and standards associated with the government auditing standards as well. The next page talks about the responsibilities of the management for the financial statements. So obviously we're responsible for going through and doing the internal controls, the risk assessments, going through the procedures to ensure that we believe that the balance sheet income statement, cash flow statements are materially capital. The next paragraph just talks about the responsibilities of management for the financial statements. So obviously, it's the organization's responsibility to make sure that what's presented to us is that obviously diligence on that. So then the next section just talks about a little bit more discussion about the auditor's responsibilities to do the audit. On the next page, we talk about the requirements of the information, just a lot of the findings that are back there, and part of reporting. The next section, page 5 through you guys are required to have an intake discussion and analysis, and this was provided by Tracy. And Glenn has it, and she's read through it. So yeah, if you guys would go through it and Glenn changes to it, you can guys let us know. So these sections are basically just a synopsis of what went on during the year, and they are, although we do them to make sure that I want something we not going to just that, especially the numbers. We haven't actually audited these statements. So please go to page 10. The statement of position. This is looking at the assets, cash equivalents, $160,000 this year, compared to $1,036,000 last year. And you'll see if we go down with the pilot payments table in the liability section, and corresponds with what we saw last year, is that there were corrections pilots. That's an issue this year. So obviously those got paid out. The pilot payments receivable of $159 this year, and then the receivable for $24,000 this year. That was billed in the receivable. Then we go down to the capital assets, net of the depreciation of $300,000. Very bill the fluctuation this year. Total assets for this year of $630,000. The liability section, we've got your current liabilities, the payments payable. We've got, obviously the amount that's sitting in receivables, when we receive that, that's sitting in liabilities. This table, we have about 61 equals 1%. And share question for that. As you see, the revenue and expenses. In the year ended before, the administrative income 25,747. You'll see if you think about receivable, that's $24,000. There was $1,000 actually received in 24. So the operating expenses, over there, 62,000 compared to 1,000 last year. Fluctuations between the professional contract services. Jason talked about. So we look at that operating loss of about 37,000. Non-operating revenue income. Last year we reported kind of things of interest. We were able to go and it's from to the patient and there's one so so that is some of the reflection. You see the golden pilots and the labels for the pilot that once you guys do that. Oh, and then to point out too, like last year we had penalty for $80,000. This year there still is a little bit, but that was really just here. Wasn't that corrected? That Trixie is here. So we decided based upon that being really associated with master issues, not the so you're changing that position for the year. Next page, statement of changes in that position. You just see, this is really just a roll forward of the year invested in capital assets and restricted. Look at the income statement, the change in that position, the 1494. Go to the page that you see on cash flows. And we have cash flows from operating activities. And you'll see this really kind of plays to the cash that we're talking about. The cash received from pilot programs during the year, the 1,388, and the cash payouts for the 2,000,000 So current payouts plus maybe elections. Then there's just a few cash pays for some of your professional fees, administrative fees, and other items. So net cash used for this year is 1,166. That's really average. Then the cash flows from financing activities, every time we have financing instruments, no payable, you guys pay that. Is saving this. So the decrease in cash of 1 million. The next page of your statement of cash flows. What this does is it takes your change in your net position of 14,959 and it brings you back to the net cash provided by the used activities, meaning like the net income where your change in position is on a roll basis, the 14,949. These are either non-cash items or changes in your rules that get you down to the cash. So meaning depreciation is a non-cash. We sent money out last year and year before, we're just depreciating. So that $1,900 in money went out the door this year. So you add back to the total base income, you're trying to get back to how much actually. One is the summary of some accounting policies. Just talks a little bit about your information does on the basis of accounting, they're on the full basis. Basis of presentation, just trying to get these required classifications of the net position. So when you look at your net position, so but it's broken down between that investment capital and restricted. We have restricted positions. The next section talks about the revenue recognitions on the different items that we have. Page 16 just gives you a little bit more information about the operating company. Considered there, pilots, a lot of different information, concentration of progress, the cash and cash equivalents, and adjusted. If you use the sheet, straight up service. Capital assets, facts of it's capitalized, it's $7,000. It's only the students. So often interested with that estimates. Before March 31st, we will get everyone to sign up with that. That was sign up in the actual presentation letter. Table, which just talks about, that you have. Before you just talk about, different solutions, that's pretty standard. So, which makes me is kind of how we work into the role of the district building, and compliance. Put them, you see the paragraphs, we audited, the information, we looked at the compliance areas and. Which we don't. Page 4, basically, we had audit report, but in online, opinion of financial statements. Material issues related to the elements, material associated with the. Follow and show the summary of the prior year audit findings. We have to listen on yet, and you'll just see down below which is that there was some documents for the.
Let's make this a little bit of a.
The first page, there is no page. Third page is just saying that we completed the audit, that should be filed online. And then the rest of this report is just including any reporting pages and findings that were done. So on the next page, it goes through, starts going through all sections. So the first one is our audit responsibilities under US general quality standards. So it says that we are planning and performing the audit to obtain reasonable rather than absolute assurance. We're considering internal control and we're responsible for maintaining these matters, material pieces. The next section has the plans, scope, and time of just states that we have the engagement letter signed back in 2024 and the private client package letter in February, and which conveyed our scope and compliance with all ethics requirements regarding independence. We are required to be independent of the agency, the authority, sorry, and we did not have any independent issues. Quality of aspects of the entity's accounting practices. We would have to report if there's any significant accounting policies. In the past, there's a new accounting standard that had to be adopted. We report that here. There was nothing adopted. Significant accounting estimates. These are judgments management would create. For example, the only one relevant to the authority is the useful lives of property and equipment. Depreciating an asset, just in how long and how much money, recognizing that expense over. It's just an estimate, best guess of how long that asset is going to exist. We just have to disclose that that is an estimate. So, Financial statement disclosures, and then corrected and uncorrected misstatements, any adjustments we would make, we would be including here. We're trying to communicate all these. So of the adjustments that we did make, before when we started the audit, the change in net access for that position was negative 40,000. We made the adjustment to reclass the forgiveness or recognize the forgiveness on fees and interest, which ended up increasing the revenue. So at the end, it's up to about 14,000 loss. Two other adjustments we made, we just made a reclassification for your that position between capital assets and unrestricted that position. This is just a balance sheet adjustment, didn't actually affect your net position in any way, so it's just your allocating for just investment. The other one is to reclassify the payments payable. There's the two different regular trade payables and specifically to we just did a classification to leave those amounts to make it easier to track specifically, but again, it's just the balance sheet adjustments. And then we didn't have any other. If there were adjustments that were below our materiality threshold that we deemed not necessarily opposed, we would communicate those to you just so you were aware of those things that we didn't adjust. We didn't.
Just to go back.
Yeah.
Put that here, but when we do audits, a lot of times we just get things to exactly what you want. They should be external. So that's really says, the middle one did have a fact about it. When the entry was reported, it was reported correctly to that position rather than showing things like income. So I think this is something that the presentation.
So our judgments about the quality of accounting principles, we just kind of review some of the principles and estimates and things that the authority has adopted and just determine if they're feasible.
So if you look at number one, which is really a discussion of all of your principles that you follow, we're reviewing that.
Difficulties encountered in performing the audit. Disagreements with management, again, we do not have expense, there are no consultations with their comments, and no matters discussed prior to retention. We identified no material errors, no known compliance, and then as we had said earlier, the management representations will be signed and we'll update the date. To match the financial statements once that issue, and then we do evaluate subsequent events to see if any additional sources need to be posted. It's not that's through the data. So those will be updated. And then the final pages are related to this report on the controls. It goes through and defines the different types of deficiencies. Levels significant, the material weakness being the most significant deficiency, that's the control efficiency and non-compliance. As stated multiple times, we got that one. And then the final page, a report on internal controls, where we just include any deficiency or other matters. Other matters are, yes, other matters are just it's finding, it's not anything you're doing wrong, it's just things we spotted that you can improve on, that we just help clean up your books maybe a little more. It's not an issue, it's just an issue. So the first one is clearing up the outstanding accounting software. The accounts payable aging report, accounts payable itself, I believe is on 10 cents between the GL and actual, it's nothing. But if you were to actually look at the aging, there's multiple amounts that just kind of list positive and negative. again, there's a zero effect, it's not anything, it's just.
One of the things that happens. Module within QuickBooks, within accounts payable, don't start doing July. When we start doing journal entries to the accounts payable module, then you create this huge like AP like agent that's just looks really messy.
Looks like there's a lot more.
And there's nothing going on, like, I don't know, page work of like nonsense. And it looks probably just something all on plenty.
That can be cleaned up.
It would just be easier, to just clean it up and get it so that we run the jig. If there's one invoice that's outstanding, it shows it's that rather than all this nonsense. Yeah, so.
Yeah.
Jimmy's smiling because I make him re-sign paperwork from the state over like pennies.
Every sign is always wrong.
It was a penny off.
And then the second one is adopt a formal capitalization policy. There is not a specific, I believe the financial statements, we have set $5 threshold, but there is not a specific policy in place that says this amount of types of assets over these useful lives. Don't really form of adopted policies. So it's just a recommendation. Again, it's not
Something. Or people do it. Or we want to change and it's like, that's was. No one noticed. That's what I'm, so we said on the first page, which we haven't provided comments regarding the differences. I didn't catch that on my first review of this. So with that wording will come out, we didn't find it. That was.
Okay, all right, good catch.
Yeah. It will work for with the passages for the. That's all, whatever you want to do. Sure, we can like.
We moved on. I don't have any updates or discussion, so tell me the role.
Sorry.
So tell me the role that we have for our upcoming board meeting.
Mostly, so what we'll need to do here is make a recommendation as to whether or not the board should approve the
Okay.
audit as presented with the adjustment that was just noted, the edit that was just noted. And then during the meeting, what we'll do is Gwen will have, it'll probably be a shorter presentation, less page to page, more big picture stuff. And this committee will then be asked to comment on, your thoughts and then make that recommendation to the board. And then the board will vote on it. So.
What are our deadlines that we're facing? Remind me.
We have to have our Paris reporting submitted by April 1st.
Okay.
So that includes a final version of the audit report. In the main meeting, I also have all of the other Paris reporting in there that we need to look through and just make sure that's all in line as well, but that all goes in at the same time by April 1st.
And that,
That would be great if there was a motion to, great. Please. And then we just need to call for a vote.
I call for a vote. Do I have to go into more detail?
No.
Okay.
All in favor?
Aye.
Great.
All right, awesome.
This is Stephanie's first meeting as.
Yes.
Great.
Thank you very much. You know, long presentation. That was wonderful.
Really should let everyone else roll.
And Tracy, me too, for all the direction. I appreciate it. Okay. And so I think we're all set and we could most likely adjourn from this committee meeting. Unless you have anything else, so a little early, so. Okay. Then I vote. Awesome. All in favor?
Let me figure out. So